20 months after announcing that it would buy Future Group's retail, wholesale and logistics business for Rs 24,713 crore, Mukesh Ambani's Reliance Industries on Sunday backed out of it. Reliance said the deal cannot be implemented after the secured creditors of Future Group's flagship firm Future Retail, which operates Big Bazaar and Easy Day stores, voted against it. Once India's second largest retailer with more than 1,500 stores, Future Retail, along with other group companies, are now expected to go to the National Company Law Tribunal as lenders seek to recover their dues of almost 29,000 crore rupees under the Insolvency and Bankruptcy Code. The deal has been at the center of a lengthy legal battle between Amazon and Reliance. Amazon has challenged the takeover in various forums and obtained legal injunctions that stalled the deal. In August 2019, Amazon had invested about 1,500 crore rupees for a 49% stake in Future Retail's promoter entity Future Coupons, indirectly gaining a 4.8% stake in the former. Amazon says its 2019 deal came with an agreement that bars Future Group from selling its retail assets to Reliance without its permission. Amazon was looking to expand its foothold in India's vast retail market. In 2018, Amazon and private equity firm Samara bought food and grocery retail chain More from Aditya Birla Group. When it comes to tapping India's retail consumer base, companies like Amazon face more hurdles. Foreign investment in offline multi-brand retail is tightly controlled. India allows 51% FDI in multi-brand retail under the government route, subject to the investor fulfilling several conditions. States can also decide whether to allow foreign-owned multi-brand stores. India's retail market was worth $883 billion in 2020, according to Forrester Research. The market size is expected to grow to $1.3 trillion by 2024, dominated by the grocery segment. With the Future Group's retail, wholesale and logistics and warehousing units, Reliance was aiming to bolster its JioMart app and increase its presence in the online grocery delivery space.
The small shareholders when they voted overwhelmingly in favor of the deal that Reliance had brought to the table. But since Reliance has acquired so many of the assets, acquired is the wrong term. They've been able to get the leases to a lot of the offline stores and effectively taken control of those assets. They are no longer in a position where they need to spend $4 billion to get those assets. And therefore, what ends up happening is that the secured creditors, the unsecured creditors, and the equity holders in this situation end up worse off than they were before. Amazon is blindsided by this, and so one can definitely record this as a victory in the short term for Reliance in this tussle. But that said, I think Amazon will be pursuing this more aggressively. In terms of Amazon's strategy, I think this was more of a strategy to stop competition than to grow. And therefore, there is it will likely challenge the sale of these assets or the transfer of these assets in court. One should not be surprised that this will be drawn out for some time. I think one must record a few wins that have happened along the way. I think the fact that the Supreme Court upheld the Singapore arbitration was a big win for India Inc. in general. Yeah, but I don't think that accounts for the fact that if you're up against Reliance, then things are not going to be as easy as that. So I think one of the factors here is that Reliance's approach has always been to seek apology, not permission. And in this case, we can definitely see how Reliance has been more proactive than anybody expected them to be, and got what it wanted. And Amazon is pretty much stunned by the speed with which a lot of these movements have happened, and just the creativity with which it has been done.
Even as the deal fell through, Reliance is in a sweet spot after taking over 947 stores of Future Group, citing non-payment of rent after transferring the leases to itself. These include 112 central and brand factory outlets of Future Lifestyle Fashions. Reliance may reportedly bid for the remaining Future Group assets at the NCLT, leaving few options on the table for Amazon. Future Retail last month said it was committed to taking back its stores which were taken by Reliance, saying it had been surprised by what it called drastic and unilateral action by Reliance. Amazon and the lenders may also support the company's effort in this regard. Meanwhile, Amazon also might continue its legal battle related to the deal between Future and Reliance. Whatever be the outcome, Reliance will continue to enjoy its undisputable pole position in the country's retail sector, as the fall of India's original retail king and Future Group founder Kishore Biyani is sealed. As for Amazon, the value erosion of Future Group's assets in the past 2 years means its effort to make any progress on its offline retail ambitions in India.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.